Welcome to the Hamsey Analytics Daily Market Commentary. I'm Paulo Navarro. Today is Friday, November 16, 2012. For the market internals, the New York Stock Exchange advanced decline differential closed at 1,425. Nasdaq advanced decline differential closed at 437. We had one new 52-week high for the S&P 500 and 27 new 52-week lows for the S&P 500. Very bullish action here on the advanced decline differential data. For the volatility, 586,000 contracts traded on the VIX today with 61 million in total premiums paid. For the dollar-weighted put-call ratio in November, we saw 4.1 reading, which is very bullish, with 24% of the total premiums paid. On December, a 0.36, which is bearish, with 30% of the total premiums paid. And in January, a 0.10, which is very bearish, with 44% of the total premiums paid. Kind of a neutral here, up and down for the dollar-weighted put-call ratio. Here we have the daily chart for SPX. We have an outside day reversal, pretty positive from what it was being a big sell-off. We ended up 6.5 handles up for the day, and we are right now at 1359.88. That was interesting today. The reversal, we saw pretty big buying pressure in the morning after the sell-off, so that was worth taking into consideration. Let's look here at the weekly chart. We still have our negative week. We are right now at the -1, -2 sigma channel. That's worth considering here. We bounced off -2, which was important. We talked about that target last week, last Friday. We touched it, and now we bounced higher. That was interesting here. CI continues to be downward sloping, and looks like we continue to have a downward trend. Of course, here we are getting lower lows and lower highs. We need to start to reverse that if we want to go higher, but at least today we did something important, which was go higher throughout the day. For SPY here, you can see clearly, again, this is a pretty bullish reversal. We have a hammer here, or a spinning top, we could call it. But the important thing is the way we reversed from the lows. We made a new low from yesterday, and we were able to reverse. We're looking here to test the 200-day moving average. We talked about that yesterday, starting to leg into the shorts, and maybe look for that 200-day moving average around 138.60, if I'm not wrong here. 138.42 is going to be the target we're looking at here. If we go to the weekly chart for SPY, here we have the weekly chart, again a bearish chart. We're still having lower highs, lower lows, and we continue to try to look at for lower prices on the longer term. We're going to see how the daily one acts at the 200-day moving average. If we are able to get there, that's going to be critical there to see. Let's go here now to the daily chart in the Qs. We have a hammer here. We do not have an outside day, but we have a very nice hammer here, bullish, and it's green. Very nice, very important after Apple had a huge turnaround in the day, almost reaching 500 in the morning, and then it came back almost to 530. Very nice reversal, also helping the Qs here. So what we're looking at here, a positive chart, positive candlestick, maybe looking for higher prices. We talked about, let's look right now at 0 sigma, 64.55. That's going to be the target here to look at on the Qs. That's going to be important. And if we go to the weekly chart, here we have the weekly chart. We have a bad candlestick. We touched -2 sigma. We talked about last Friday, and we also touched our 62 target. That was important. Also, that in mind, we have a bearish chart here on the longer term on the weekly chart. Going to the moving averages chart, here we have it. This is the daily chart. As you can see here, nothing has changed. The downtrend continues. We do have a kind of more bullish chart candlestick, but still we did not even make a new high here. So we're looking for the 20-day moving average, 64.55, and even go up to 65.40. That would still be pretty bearish on the longer term. Keep in mind, this is a pretty bearish chart. So that's what's happening here on the Nasdaq ETF or the Qs. If we go to the IWM, let's start with the daily chart. Here we have Interesting risk-off ETF, the Russell 2000. Here we have an outside day reversal, closing almost 1% up for the day, which was positive. Again, this does not change the downward trend we had. We are just getting somewhat of a bounce we were talking about the last couple of days. If we look at the weekly chart here, pretty bearish, lower lows, lower highs. Looking for the 0 sigma at 81.38. That might be the bounce here. Playing the bounce right now. Outside day reversal. Maybe we're starting to change the trend, but it's too early to say. We just have one day, and one day, you know what they say, it doesn't make a trend. So we're targeting the 80.56 or 80.09. That's going to be our targets here, just to get a bounce and then try to go even lower. We're talking about even going to 73, 72.80s. So that's going to be important. We talked about coming even to this lows here. So maybe get a bounce, play that bounce, and then we'll talk and take it up from later. From here, we're still pretty bearish. Let's go to GLD. Let's start here with the daily chart on GLD with the Sigma channels. Sorry. Here we have daily chart with the Sigma channels. You can see it here. We are right now at 0 sigma. We want to break to the upside and start going higher. Target from here. We're still looking at lower prices, lower highs, as you can see it here pretty clearly. Looks like we might be even going to test that 200-day moving average again around this 161 level. Let's go to a weekly chart to see what's going on here on the longer term with GLD. We bounced off last week from the 0 sigma. This week we're coming back again. We're going to have to take a decision here. We're going to break it and go even lower, test that 200-day moving average at 161, or we're going to really bounce and go to test that 176. We go at the daily chart here. We broke the trend line. We talked about it yesterday. Let me go get this one bigger. We break this trend line. We were not able to break the 55-day moving average here, this blue line. Couple of times that happened before here, and after that we just started to selling off. Pretty much similar pattern here. We started selling off. We had quite a sell-off in the morning today in GLD. Then we bounced back lower, having basically a flat day. We're going to have to wait and see, but from here, it looks like we want to test maybe this 100-day move upward channel at 162.70. By the time we get there, maybe 163, that's going to be important. But again, we want to start going higher, break that 55-day moving average. If you're not in a trade in GLD, wait to see what's going to happen. Let it get a decision if we're going to break down the 200-day moving average and go lower, or if we're going to maybe break this one, the 55-day moving average, and go higher. This is a no-go here if you're away from GLD. Now let's go to SLV, and let's start with the Sigma levels chart. I'm going to start here with the daily chart. Here we have it. We have a down day today, almost 1% lower. We were selling off in the morning. We tried to came back higher, failed, and we ended up down almost 1% again, closing at 0 sigma. That's going to be pretty important. We want to make a decision here. You can see the Sigma channel bands are contracting. Next week we don't have much coming out, and we have a short week. Maybe we are 1 or 2 weeks away from maybe a decisive breakout either to the upside or to the downside. So again, pretty much the same we were saying for gold. If you are not on a trade here on SLV, this is not the time to get in. Look at this chart. This is the weekly chart. We bounced off here after getting this outside week reversal, and we take it out next week. Now we're coming back lower again. Pretty much what we're saying here, nothing's going to happen. Some consolidation after the huge run we had earlier. And on the daily chart here with our moving averages chart, 55-day moving average perfectly act as resistance here, and we dropped 200-day moving average, and same story here. We are not being able to break that to the upside. Today, intraday, we broke this upward trend line we had, very short term, but it's starting to look like either we're going to break this 3207, which is the 55-day moving average, to the upside, or we are getting a bear flag that you can see here. It's going to be important. Take a side. We don't want it to be consolidating for too long. Either break and go lower or break out and go higher. I think we are a week or two away from seeing this big movement. We're going to have to wait and see the tea leaves if we're going to go higher or lower, and that's going to be pretty important. So stay away from GLD right now. Get some more confirmation. That's what we're looking out here. Let's go to this chart and let's look at the VIX. The VIX chart today, we were down 8 points for the day, almost 9%. Now at 16.14, we were talking about this level on the daily chart. We want to go below 16 and test the 15s or above 21. Well, we're not getting either still, but look at this compression here. Look at the compression of the sigma channels. We are almost, and I say a week or two max, for a big breakout here. Watch the VIX, watch for the signs. If we're going to break out above the 23, it's going to get pretty ugly on equities, and below 16, 15, it could get pretty nice. A big rally here, maybe end of the year rally. My guess here, we will go higher. It will not be that nice, but that's what I'm looking at. Watch the weekly sigma channels on the VIX. Look at the compression here. Not even here when we get this big move was so compressed, and you can see here what happened. So we're going to see what happens with this compression on the VIX, and watch the other charts. That's it here for the charts. We have a special offer by TradeStation. Get your Hamsley Analytics proprietary indicators paid by TradeStation. Contact Active Traders office in Chicago, Peter Albino, at the number listed below. Have a great weekend, and I'll talk to you Monday.